What's going on, guys and girls? Welcome back to another week of what I like to call Mind Over Markets. This is your bi-weekly dose of performance coaching. It's your bi-weekly dose of a little bit of psychology and everything that you guys need to get yourself prepared to find success in the markets. For those of you that are tuning in, thank you so much for being here. As always, I appreciate your attendance and looking forward to having another insightful session with you guys today. Now, for those of you that have been following the progress of what we've been doing with these sessions over the last few months now, last week specifically, we focused in on a topic which we titled Surviving Drawdown. We talked about the importance of surviving drawdown from the grand scheme of things. And we mainly focused on the idea of how you come out the other side. Because I think one thing that is absolutely inevitable for every single one of us as consistently profitable or aspiring consistently profitable traders is that period of time is coming. That period of time is the truest test of your success in the long run. And if you never learn how to be prepared for that moment, you're always going to fail. You're never going to find the consistency that you're looking for in the grand scheme of things. And last week, I kicked off the session with a statement. Right. And this was a reflection of something that I have learned over many years in the markets. And it was this idea that the game of trading and investing is not necessarily about how much money you make, but it's more focused around how much money you can actually keep. Right. It's not about how much money you make. It's about how much money you can actually keep. And this week, we're going to continue with the focus around that theme, that comment, that statement, that reflection about the markets. And I want to build on it because a couple of weeks ago, we talked about this idea, but we talked about it from the side of actually managing the downside. This week, I want to talk about why winning is actually hard, right? I want to talk about things from the other end of the extreme. Whether you're someone that has found a strategy that allows you to have profitable trades or profitable positions in the market, or maybe you're somebody that's actually found a certain path to success, but you're finding there's a ceiling to how high you can go before you seemingly self-sabotage and give all your profits back and have to start kind of, a few steps behind where you were before. Maybe you're somebody that's being a little bit proactive, and what you actually want to do is prepare yourself mentally so that when the time comes, when you're finding that level of success that you've been aspiring to, you're ready mentally to start tackling those problems. Because the one thing that I find, and maybe this is going to be a common reflection amongst everyone that's tuning into today's session, but I find that most traders in today's day and age, they spend all their time obsessing over charts. Everyone's trying to learn a new strategy. Everyone's trying to find these like sniper perfect entries. And the reality is they're going to happen sometimes. But strategy is just one piece to the puzzle. Your edge in the market is a massive foundational piece, but your edge is not just the strategic element. It's not just the things that happen on the charts. I find really finding success is a mixture of three things, really. It's having that strategic edge in the market, but it's also coupling that with a psychological edge and then having a risk-defined edge to really bring all of this together. Because if any of those three things are out of sync or out of balance, what you're going to tend to find is you're either not going to find the profitability that you're after, or you're not going to find the consistency in order to be able to sustain it. And it all goes back to the statement that we started today's session and our last session with, which is this game is not about how much money you make. It's about how much you actually keep. So what we want to focus on today is really moving away from the idea that everything that we need to do has to be focused on charts. If you've been familiar with, like I said, any of my sessions, this is number 12 that we're working with now. If you've been familiar with any of my previous 11 sessions, you will understand, I think I can only recall one point in time on one session where we might have brought up a chart or a picture of a chart. But otherwise, it's purely been me, you guys, and a true and real reflection of what it takes to make it in this game from a psychological approach. And that's a very, very important part of what you need to focus on to, again, find that consistency. So I find there are not enough people, I would argue, that are actually preparing for the emotional battle, the psychological battle. They're not really prepared for how to avoid the chaos of actually finding success in this game. Now, whilst there are few people that actually spend time learning how to do it, I would argue there are even fewer that are actually able to sustain success. And if you spend any time on social media and you're actually very observant, you'll be aware of this idea. You'll see people that talk about making profits sometimes. They flash payout certificates, or they talk about how much money they've made, or they show a brief track record for a day, a week, maybe even a month or so. But where are they 6 months, 12 months, a couple years from now? Because that's what really counts in this game. We understand, or at least I would like to believe that most of you that are tuning in and watching this, again, if you're familiar with my content, you'll understand that actually making a successful trade doesn't really require much skill. I could basically close my eyes. I could open up any market, any asset class that you guys were interested in. I could blindly hit buy or sell with a 100-point stop and a 100-point target. And my odds of making money on that specific trade, probably close to 50-50, right? Now that changes dramatically when you expand that sample size out over time. But in that one specific trade, close to 50-50. And this is why I say actually making money is not necessarily the hardest part, but actually learning an approach, a framework, a process, a mindset, a methodology to actually be able to sustain it is very, very important. Because the one thing, again, my experience has taught me in this game is that winning tends to expose weaknesses that losing doesn't really prepare you for, right? Losing and having that period of actually finding your edge and your flow in the market, it's an important journey that every trader has to go through and experience. But winning, it exposes a whole new side of you. It exposes you to battles that maybe you weren't used to experiencing when you were finding your feet in the market. And that's what we want to focus on today. Because winning encompasses a lot of different emotions, a lot of different thoughts, a lot of different bad habits that you don't tend to experience when you're consistently losing, right? The dopamine spike that we get from either one single winning trade or a streak of winning trades in a row, it brings on things like overconfidence, which leads to over-risking. And if you never learn how to manage that, then again, developing that consistency to actually be able to sustain a certain level of success is very, very difficult. And so the question I want to start with today, and more so a reflection point for every single one of you that's watching this, whether it's live, whether it's watching this back on a recording, is I want you guys to stop and think for just a second. And again, I'm going to pause for about 10 seconds or so, but I want you guys just to think about this. Why do so many traders blow up after their biggest win? Why do so many traders fail to recover from drawdown after gaining new investment or after being in the spotlight for a little bit of time, right? Just think about that for a second. Why do so many traders blow up after their biggest win? Why do so many fail to recover from drawdown after gaining new investment and gaining a little bit of spotlight or traction? Because the reality that I find is the higher that you climb, the thinner the air. Much like in our real world, right? The higher you climb, the thinner the air. The reality is pressure rises. And the closer and closer you get to what you believe to be the top, the pressure increases even more. Because now it's not just about finding success. You've discovered this whole new battle, which is actually how do you learn to sustain it? If that's something you've never prepared yourself in order to be able to do, it's going to be very, very difficult to do just by winging it. And this is why this session, I want you guys to think about having a plan, regardless of where you are in your journey, whether you're already profitable, whether you're already acquiring investment, or whether you are right at the start of your journey and you're trying to figure out, how do I find my path to success? This is a piece to the puzzle. Preparing yourself for what you do when you get to the top or the perceived top is a very important part of this game. And unless you spend the time, the mental power to actually formulate a plan, a methodology to keep you at that level, it's something that you're probably not going to succeed with in the long run. Okay? Now, let's start by talking about some just real, raw, and honest statistics for just a second, right? Because if you look at least brokers that are regulated inside of Europe, we actually have some real authentic and real statistics, not the fluff and the social media, the stuff that you see on social media, but I'm talking about real statistics of what it takes to be successful. And I don't say this, I share these statistics quite often. I don't say this to put you off. I don't say this to discourage you from trying to trade. I say this because I want everybody to understand that this game is difficult. I want everybody to take this game seriously, to understand that it's not a path to overnight riches as many people tend to think. The reality is that around 70 to 75% of traders are failing to make a profit over time. And these are people that are trading their own capital, right? I would argue that out of the 20 to maybe 30 odd percent, 25 to 30% that are actually doing better than not losing money, probably a good portion of them are breaking even. A smaller portion of them are actually making enough to sustain a somewhat suitable living. And an even smaller proportion based off the back of that are actually making some real money in this game, right? Now, there are going to be some of you watching this that think maybe the odds or the statistics of making money are better in the prop firm space, right? For those of you that are interested in the Darwinex platform, I'm sure you're no stranger to I would say the modern day prop firm space. And I would argue that actually the statistics are far worse of making money in this because there are rules, there are restrictions, something that Darwinex does a very good job of removing, allowing you to trade with your own freedom and flexibility to really allow your edge to find its groove in the market. But in the modern day prop firm era, we have rules, we have restrictions, we have guidelines, we have limitations that we have to learn to abide by. And if we don't, we have to start again from step one. Now, in the prop firm space, the last statistics that I saw are only around 10 to 15% of people on average are actually making it through phase one and phase two, right? 10 to 15% on average. And those that are actually able to get to a point where they make it to their first payout, 3% or less, right? 3% or less. And this is why I often say that a profitable trade, a profitable week, a profitable month doesn't guarantee long-term stability. And this is why you would have heard me say in previous sessions that the worst thing that you could possibly do is tie your idea of success to passing a prop firm challenge. Most people's goals and objective is, I need to get to the point where, I'm funded with, 10K, 50K, 100K. Maybe if you're doing things the right way in terms of what we're promoting here with Darwinex, maybe the objective that you should be focusing on is not silver or gold. It should be focusing on trading in a way that actually gets you paid over time. And this is something that not a lot of people tend to focus on. One trade doesn't guarantee anything. 1 week doesn't guarantee anything. 1 month, 1 quarter doesn't guarantee that you're going to be a consistently profitable trader. The mindset of a winner is completely different to someone that is focusing on trying to find their edge in the market. And it's something that, again, not enough people actually stop to think about. And this whole issue starts right at the very beginning. If your measurement of success is acquiring capital or acquiring funding because you've had a good period of time, then you're setting yourself up for a little bit of failure in the long run. Because as we've already established over the last couple of weeks, there are battles on either side of this kind of pendulum in how we work with trading. There is a middle ground where you'll be making money, but there's a point in time where you'll lose money. You'll go through a period of drawdown, and there's a point in time where you'll make a good amount of money. You'll hit all those milestones, but then actually sustaining it is the battle that you have to learn to be able to overcome. So the thing I want you guys to start focusing on, and what we're going to be really trying to give you guys a real perspective shift around today, is this idea that execution under pressure often reveals flaws and gaps in your mindset that maybe you haven't yet prepared for. Because when you get to the stage where you're hitting the goals that you're looking for, whether it's acquiring funding, whether it's reaching silver or gold status here with Darwinex Zero, you have to understand that a lot of these milestones often bring about thoughts and emotions which maybe we haven't been used to before. And this is going to apply to some of you, but maybe they bring about thoughts and emotions where you develop this fear of losing. You feel like you've climbed to a whole new level. You feel like you're starting to reach the top of the mountain, but now your fear is, I don't want to fall off. I don't want to go back to the very beginning. That fear of losing creates a certain level of hesitation. That hesitation leads to maybe revenge trading or emotional trading, or maybe it leads to a point where you just feel like you've scaled up too quickly. these are all things that you need to be able to be prepared for mentally. Because if you're not prepared mentally, this is going to bleed into your execution and subsequently going to impact your performance. So for a lot of people, there is this gap in their expectations, which is really what we're trying to fix today, right? You have to remind yourself that success increases internal pressure because now you have to maintain it. It's not just about acquiring funding or getting your first payout or, having your first profitable month or quarter or year. It's about actually understanding, how do I sustain this over time? So another reflection question that I want you guys to think about, and again, I'm going to stay silent for a few seconds while you guys reflect on this, but I want you to think about this idea. Have you ever developed a process, a framework, a protocol that prepares you for what happens or what is your plan the day after hitting your milestone or hitting that win that you've been working towards? What's your plan of action for that day? Just think about that for just a second. Right? The reality is most people don't have a plan. Most people don't know what they're going to do when that day comes. It takes them by surprise. And when you're caught off guard and you don't have a plan for how to deal with that moment, you're always going to be on edge. You're always going to be impulsive. You're always going to be emotional because there is a gap in your expectations. You don't know what to do in that moment. You don't know what to do except feel the thoughts and the emotions that naturally arise with that, which are usually some kind of elation. Usually you're quite proud of yourself. Usually, or you can very easily fall into this trap of overconfidence. And we've already established what impact that has on your performance in the long run, right? Now, for a lot of people, and again, something that you'll often hear me say on these sessions, many of the issues that you experience in the markets, they're not a you problem. They are a human problem. And the reason I always describe this, the reason I go to the lengths that I do, and I always include these as part of my sessions, is because I want you guys to understand, if you're having challenges or setbacks at the moment, which are keeping you from a certain level of success that you know you are capable of, more often than not, the problems that you're experiencing are human problems. They are a result of how the human mind is naturally wired. And if you're not prepared for this, this is something that's going to work against you. And so by helping you guys to understand the psychology behind what you're experiencing, you're going to have a better understanding that, firstly, these are things that I need to prepare for. But secondly, I don't need to be kicking myself when I'm down. If I've made a mistake, yes, it's something that I need to be improving on, but I don't need to be telling myself that I'm useless and I'm not capable. I need you to understand these are human problems and these are things that can be fixed, but they require the right mindset. And the most important part of fixing these problems, and it's the exact reason why we start here, is for me, the start of creating any lasting change in the markets is a result of initially starting with a higher level of self-awareness, understanding why you're thinking and feeling what you're feeling. Because once you can do that, you can start to map out a pattern of thought, a pattern of emotion, and subsequently, for a lot of people, a pattern of behavior. And the closer and the more clarity you have around mapping out that pattern of thoughts, emotions, and behavior, the more you can actually start to do something about it. Okay, so let's take a brief moment to actually talk about the psychology behind winning, right? Because for me, the part that most people miss, the piece to the puzzle that most people don't account for, is that winning as a trader or an investor, regardless of what approach that you have, it's not just technical. It's not just finding the right setups. It's not just picking the right asset classes. It's not just developing the right entry and exit criteria. It's really understanding that creating true lasting success over time is also a game of psychology. It's also a game of understanding yourself. There are many things that us as human beings, we bring to the table, and we're not even aware of the impact that it has on us, right? We've discussed some of these in previous sessions, but I want to revisit them very, very briefly to help refresh your memory to understanding what impact this has on you over time. Because the underlying biggest one that tends to have an impact on most people is your belief system. It's the beliefs that you bring with you every single day. And the ones that you have to worry about are usually the ones that you're not really conscious of, right? The ones that you're not conscious of and they hold you back in many areas of life. We refer to these as limiting beliefs. They are born much earlier in life in a lot of cases. They could come from childhood. They could come from things that you learned as a baby, that you learn from parents, that you learn from teachers, that you learn from experiences at school, right? But every single one of them creates an imprint on who you think you are, what you believe about the world, and it really changes your perception of how you think, feel, and act on a day-to-day basis, right? These are ingrained, like I said, as part of your upbringing. They are maybe ingrained as part of your culture. Maybe they are experiences that you've had with money and success much earlier in life. And they don't always have to be your experiences. They can be the experiences of friends, family, parents, guardians that have brought you up, and they have taught you certain things about how you believe the world works. They don't necessarily have to be true, but they are a story. They're a piece of software that you carry in part of your mind that plays over and over again. And until you figure out what that piece of software is saying, or what that piece of software is getting you to do or think or feel on a day-to-day and week-by-week basis, you're always going to struggle to find the consistency that you're looking for, right? So what I want you to understand is that if you're somebody that has this limiting belief where you have this inherent fear of success, that's going to transpire into a fear of taking responsibility or accountability. And that's going to really impact how you learn and grow over time. That's one of the most dangerous things that you could have as a trader. Because as a trader, every moment in the market is unique. Every moment you have to task yourself with trying to be better every single day, right? There is no guarantee that the strategy that worked yesterday and last month and 5 years ago is going to be the same thing that works over time. A decay in your edge is very, very real. And if you're not learning how to adapt, improve, and grow over time, then actually this fear of success, especially in this game, could actually be a very, very real thing, right? For some of us, we carry what I like to call a lag in our identity, right? And this is where sometimes you'll find that you have this perception of what you believe that you are actually capable of. These are things that you bring with you to the table, right? That belief of what you're capable of may have come from all of the times that we've just discussed, your upbringing, your culture, your environment, the schooling system that you had, whatever it is. But it ingrains into you a certain level of kind of I guess you could think of it as a ceiling as to what you believe that you're capable of. Now, if you're doing all the right things and you're winning and you're succeeding and you're moving forward and you're progressing in a way that you would really like, then what you have to understand is that for a lot of people, we find that we may actually outgrow our vision of success. We may believe that we are capable of doing something, but actually if you surpass that, if you move past that benchmark, where do you end up? If you're not prepared for that moment in time, where do you end up? And again, you often end back in this impulsive state. You end back in this state where you seem to experience this period of fight or flight, where you don't really know what to do. And that is usually a dangerous ground as a trader, to be trying to make logical and rational decisions about how you manage money on a day-to-day basis, right? For a lot of us, and one other big area that tends to impact our psychology, especially in this day and age, we call this survivorship bias, right? And this is where the only people that we really compare ourselves to are other people's highlight reel. This is what I like to think of usually social media as. Social media will always show you the highs. They will very rarely share you the lows. And this is why I think I'm a big advocate of this idea. I think we need more transparency in the space. We need people to talk about the idea that trading and investing is not sunshine and rainbows. There are many highs and there are many lows that you are guaranteed to experience as part of your journey. But social media doesn't always paint a true reflection of what that is like. Social media will only ever show you the highlight reels. They'll show you the point in time where people have already won. They're not going to show you the X amount of failures that it took for people to get there. And in this day and age, honestly speaking, you don't really know if what you're seeing online is even real, if it's been exaggerated or just straight out fabricated, if I'm completely honest. So it's a very, very difficult space to navigate. And if your vision of comparing yourself to somebody else is coming from a very skewed perspective, from something that's not real, heavily exaggerated, or you're focusing on such a small subset of people that you believe is a norm, it's not going to give you a very true reflection of what reality of this game is really like. If you don't have a true reflection of reality, again, it's going to get you to make assumptions. It's going to get you to process things in a flawed way, which is not going to set you up to succeed in the long run. If you believe that once you've funded, once you've got your first bit of investor capital investment under your belt, if you believe that's your vision of success and that's where the story ends, you're probably in for a pretty rude awakening, right? The moment that first loss, that first period of drawdown, that first losing streak happens, you're going to struggle to find your edge and you're going to struggle to get back into your groove. And that's, again, something that you have to be prepared for. A couple other things that I think have to be mentioned when it comes to the psychology behind winning is I talk a lot about cognitive biases. You would have heard me mention this on previous sessions prior to today. One that I'm often very, very mindful of is the impact of recency bias on our mindset, right? Recency bias, for those of you that are not familiar with it, it is our mind's natural ability to really prioritize and put more weight and emphasis on things which have happened recently, right? If that's the only thing you find yourself doing, then what you have to understand is you're going to be very, very emotionally driven during the lows and the highs. When your recent experiences are all losses, it's going to be very easy to feel doubtful of your approach and your strategy. If you find that you are going through a patch where you're having a lot of winning trades, you're going through a very successful period, you're going to find that it's very easy to fall into a realm of overconfidence. And both of these create consistency issues, right? The side where you're losing money, something that we would have talked about a lot a couple of weeks ago, the side where you're losing money can very easily create doubt. And that's where people start to strategy hop or to try and tweak things as they go. What we're focusing on today is actually more so the side of overconfidence and the impact that has on your mentality to be able to stick to your plan or adhere to your process around managing risk over time, right? But these are all a result of recency bias. Recency bias, in the context of what we're talking about today, is one of the primary drivers of overconfidence, right? Thinking that success will continue indefinitely. It's not always the case. Successful trading doesn't just show somebody's equity curve going up and to the right. If you zoom out far enough, maybe it'll start to look like that. But when you zoom in and you look at specific periods of time, you're going to have periods where people are flat. You're going to have periods where people are actually in a decline, where they're going through a period of drawdown. But when you zoom out long enough, your equity curve should look like a fairly upward sloping line. And that's what we're all trying to achieve over time. Okay. Now, one other important cognitive bias that is important to mention whilst we're on the topic is the idea of loss aversion, right? This fear of either giving back profits to the market or just a fear of losing money in its entirety, right? This is going to be amplified when you've gone through a good streak, when you've hit certain milestones in your trading and where you feel like you're going through a phase where you're actually winning. Not being able to give that money back over time is a very, very important part of this game, right? So again, we go back to this idea that success breeds new challenges. Success often reveals what losing periods don't show you, right? It brings about new elements, new challenges, new areas of your psychology that you have to be mindful of if you're serious about creating success in the long run, okay? Now, I want to pause for just a second. And I want to get you guys to focus on doing a very, very quick exercise. Again, whether you're doing this live on today's call, whether you're doing this watching this back on a recording, I would encourage you to either pause this video or stick with me live and do this. And I want you to just take a pen and paper, take your phone, take your notes app out, wherever you want to write this down. And I want you to think about 3 beliefs that you hold that are tied with the idea of success or making money. Right? 3 beliefs that you hold. There are some really common ones that people tend to talk about. This idea that money is the root of all evil, right? Rich people are evil people that, we need to stay away from, right? Success is only relevant to certain types of people. You have to be from a certain background or a certain area or a certain part of the world, right? What beliefs do you have about success and or money? Once you've started to identify some of these beliefs, right, whether they're deep, whether they're surface level, I just want you to start raising your awareness to around how these work. Once you've developed an awareness as to what some of these beliefs are, I want you to ask yourself an important question. were these something that you inherited and learned from somewhere, or did you come up with these beliefs yourself? Think about that for just a second. Right? So your task was to list 3 beliefs about success and money, and to ask yourself whether these beliefs were inherited or learned from somewhere, a parent, a teacher, a guardian, a friend, an experience, or whether you actually learned them for yourself. Now, the reality from what most people find after doing some type of reflection like this is they discover that actually most beliefs that they have, they're learned from somewhere. They are inherited, right? They have been brought about by a certain experience or something that somebody has said over time. But unless you get very, very clear on where they came from, how do you know if they're a true reflection of the world? How do you know that they're not holding you back from a level that you could grow to higher than where you are now? And the truth is, you don't. The truth is, you don't really know if you don't take the time to actually understand. My framework in how I work with people is understanding that every single one of us, me, you, your neighbor, your partner, your colleague, whoever it is, every single one of us came into this world neutral. When we were born, we couldn't hold our head up. We didn't know how to eat. We didn't know how to walk. We didn't know how to talk. Everything about us was learned at some point in time. The reason it's important to be aware of that, and the reason I choose to believe that philosophy, is it means that anything about you today, whether it's your thoughts, your emotions, your actions, your habits, your behaviors, your entire identity, it was a learned behavior. It was a learned thought. It was a learned emotion. That's a good thing. It's a good thing because it means it can be changed. We are malleable creatures. The human animal in and of ourselves, we are designed to evolve over time, right? So if you are someone that's in a position where you're not getting the results that you want, you're not as consistent as you would like to be, then I want you to remind yourself that it is completely possible to change. But the first key to breaking through this level of change is to understand, why am I not already where I want to be? What beliefs, what experiences have I had that is limiting where I want to be? Because the reality is, the gap between you and a consistently profitable trader, it's not magic, right? There's nothing in there that's stopping you from achieving that level. I truly believe if you put down and you find the time and you work on the right things, I believe anybody is capable of success, but not many people will actually do the right level of work to actually find it. And when I'm talking about right level of work, I'm not just talking about the effort that you put in. I believe hard work is very, very important, but I believe something that is more important is what you actually work on. Because if you're not working on the right things, then actually you're going to go around in circles, right? If you don't actually have an edge in the market and you spend all your time working on psychology, you're still not going to make any money. If you have an edge in the market, but you're not working on your psychology or your risk management protocols, the chances are you're not going to sustain it. And therefore, you're still not going to make any money. So the reality is, identifying on what you have to work on is very, very important. If you're in a position where, like I said, you're either still on your path to finding success, or maybe you found that you've had a little bit of success, but you're hitting a ceiling. You seem to get to this place where you constantly self-sabotage, and this is a cycle that you would like to break, then what I want you to understand is you have to start thinking differently. You have to start recognizing where you are going wrong. And before you start deciding that I need to start working hard, you need to make sure that you're working hard on the right area. Because if your solution to fixing this problem of inconsistency and not working at your full potential and not sustaining the profitability that you know you're truly capable of, you have to understand that probably more chart work is maybe not the solution for you. For some people, it might be the missing gap. But for a lot of you, the gap that you're looking for is largely psychological. It's largely down to probably how you manage risk over time and what allows you as a person to be consistent. If you don't have that, you're probably not going to get very, very far. Okay. Now, I want to start bringing all of this together because we've talked about the idea that winning is hard psychologically for a lot of us because of the human mind. And a lot of these we bring with us to the table from experiences maybe before we were even conscious enough to recognize what we're bringing to the table. They are beliefs that were born much earlier in time. We've talked about and we've given a very basic reflection on understanding your belief system, what you believe about success and money, because those are going to be two massive influencing factors when it comes to finding success or consistency as a trader. Now, once you have started to understand that there is a deeper level, once you started to develop the awareness around that belief system, I want you to start pairing that with some real process-orientated tweaks. Some things that you can actually start to build into a framework, a protocol, day-to-day habits and routines that are going to help to allow you to become or improve your odds at becoming that consistently profitable trader that you know you're capable of. Okay? Because for me, winning requires preparation. Those that win successfully, they're not just reacting to everything that happens. They have prepared for this moment. They understand exactly what they want to do when X, Y, and Z variable occurs. Success and consistent success over the long run, it requires preparation and not reaction. Okay? So the first thing that I think makes sense to implement as part of your routines is for each and every one of you to have a pre-trade routine, right? That might be little things like checking in on your emotional state, understanding what your expectations are, understanding that if you're susceptible to suffering from, certain cognitive biases, how are you going to be mindful of those certain things today? And for a lot of people, once you get very, very clear on the things that you need to be mindful of, you can start building them into a checklist or kind of a flow chart that tells you exactly what you should be doing with each part of your day. Before I can step up to my charts and before I can execute a trade, I must make sure that I have firstly, and of course, done my pre-market analysis. Do I have a game plan and know exactly what I'm looking for in terms of the charts? Fantastic. If I've done that level of analysis, now how do I make sure that I'm in the right headspace to actually be able to execute on it? Maybe I need to check in with my emotional state. Maybe I need to ensure that my expectations are not misaligned with the idea that anything can really happen in the markets today, because that is a reality for us, especially when you got people like Trump involved in the markets, and all it really takes is one tweet, one announcement, something to come out of from his mouth that will send the markets into absolute chaos and turmoil, which nobody is really prepared for in this day and age. You need to be mindful about these sorts of things. You need to be prepared for the idea that anything can happen at any point in time. And whilst doing my analysis is a good first step, I also need to make sure that mentally and physically I'm in the right or the best shape possible to actually be consistent in executing that. So I would argue once you've got an idea of what your trade routine needs to be like, this is your pre-trade routine. From a strategic standpoint, because I presume that's where most of you are starting, ask yourself to check in with the mindset after that, right? What's my current emotional state? Where would I rank my confidence on a scale of 1 through 10? If 1 was, I have absolutely no confidence and I'm incapable of pulling the trigger because I'm so scared of losing, and 10 was, I think I want to put 50% of my account on this position because I'm that confident in it, where does your confidence sit in that scale, right? When you can start getting very, very objective with how you rank things like overconfidence, because that's probably going to be one of the main things that holds people back from winning, then you can actually start getting objective of measuring this over time. Because the reality is, lacking confidence is not a good thing, but also having too much confidence is not a good thing. I would argue that the right level of confidence is maybe sitting at somewhere like a 6 or a 7 out of 10, where you're not too scared that you're not going to execute, but you're not too confident that you're going to want to risk everything on the next trade. Once you have those areas highlighted that are best for you, and you will know what's best for you based on the mistakes that you're making, the things that are currently setting you back, I want you to highlight that you need to be checking those things before you get into the markets, before you step up to the charts. Put them in a checklist, put them in a process flow that you need to follow each and every day, and don't do anything until those moments are ticked off, because that's what separates the professionals from the amateurs. The professionals have a plan. The professionals have done things to improve the odds of them being consistently profitable on that day, right? The amateurs don't really have that. The amateurs are just winging it. They're showing up, gambling their money away, and hoping that it all works out in the best case for them in the long run. Okay? The second thing that I believe makes real sense is I believe everyone needs to have a plan of how to regulate their emotions, right? Notice I didn't say control. Notice I didn't say eliminate. Notice I didn't say suppress. I said regulate. For me, regulation is a very different thing to all of the other things that I mentioned. I don't believe that the goal for any of us should be to remove all emotion. That's not what we should be working towards, right? Emotions are a beautiful part of the human experience. And actually, it's very difficult to express emotion in one area of life and not have it appear in all areas, or to turn it off in one area and then not turn it off in all areas. Emotions are not a bad thing. Those of you that are spending your time trying to fight them, what you're not understanding is that emotions are not the problem. They are often a symptom to an underlying problem. So your job is not to suppress emotions. Your job is to change how you react to them. This is what I mean by regulation. And so the protocols, the things that I advise for most people is you have to understand that a certain level of, you need a certain level of mindfulness in this game. You need to be able to be aware of what you're experiencing internally. I would always recommend that it makes sense to have a protocol to regulate how you are breathing. Because the way in which I was taught it is that every state that you have, it is linked to a certain way that you breathe. Somebody that's angry and furious and enraged with anger is not going to breathe the same way of someone that's cool, calm, and collected, right? Your breath is linked to every state that you experience. And so for a lot of the traders that I work with, I encourage that they look into things like box breathing, right? Box breathing is a fantastic reset protocol that you can do in just a few minutes that helps bring your mind and your body back into an alignment. For those of you that are wanting to know more about it, I'm not going to do a full demonstration here today, but the best and easiest resource that you could go to is flick over to YouTube off the back of today's session and look up a guided box breathing session, understand the simplicity of it, and start applying it into your trading day, right? It's going to be a fantastic tool, again, to help you to regulate those emotions and to not allow you to get carried away with them over time. So your emotional regulation protocol should be filled with a variety of different things. It should be a way to actually be aware of the emotions that you're experiencing. What is my mindfulness plan? Maybe that's your journal. Maybe that's a period of meditation. Maybe that's a period of reflection, right? What's your breathwork plan? Is it box breathing? Is it the Wim Hof method? Is it just deep breathing over time? Come up with something that works best for you. Every single one of us needs some kind of physical release for our emotions. Have you noticed that when you're really stressed, when you're really high strung during a period of time, actually exercising can make you feel really, really good? It can really release some feel good hormones, those endorphins around the system, and it can really reduce that level of cortisol that's flowing through your system. And it helps to manage all of the stress and the emotions that you're currently dealing with. It's not a coincidence, right? There are reasons, and there are reasons as to why I bring these up in sessions like this, because they can be very, very helpful when it comes to managing your emotions, right? So mindfulness, breath work, journaling we touched on, physical exercise, something to get your body and your mind engaged. Now, I'm not moving away also from the idea and the importance of actually just taking a physical break, right? I follow this philosophy that time will fix your frustration, but it will never fix your bank account. If you choose to do something silly as a result of an emotion that you're feeling, and I emphasize that it's always a choice, you have to understand that there is no amount of time away that you can spend from the markets that is suddenly going to recoup the balance of money that you lost during that period. If you're feeling frustrated, the best thing you could possibly do is walk away, right? If you're feeling emotional, take time away from the markets. The frustration that you're experiencing, I promise you, with enough time and enough perspective, it will disappear. The damage that you will potentially do to your account if you choose not to walk away, it will be there forever. If you lose 10, 20, 50, 70% of your account today as a result of an emotional outbreak, there's no amount of time away that's ever going to replace that. But you can walk away. And even if it took you a month to fix that emotion, for the emotion to die down, for you to accept the situation for what it is, you can come back and your account balance will be the exact same. That's a fact. All right. So don't underestimate the importance of just taking that break away to reset, creating that perspective shift. It's something that each and every one of us needs, but most of us all lack as part of our process. Okay, so we've talked about a pre-trade routine. We've talked about developing and using some tools, some habits, some routines to actually develop some emotional regulation, right? I would add to this a few different things. We've talked about a pre-trade routine. I would also add and argue that it makes sense to also have a post-win protocol. Maybe for some of you, you'll find that actually your worst performance comes after your best days. Your worst performance comes just after the moment of time where you've acquired a new investor or acquired a bigger payout than you're used to, right? For a lot of people, what you have to understand is maybe a mandatory reflection or rest day is going to be really, really important. Maybe not making any big decisions for 24 to 48 hours after a milestone or a win in your eyes is a pretty sensible thing to do, because we understand, based on the psychology and the cognitive biases that we've discussed, these are all things that are likely to work against you if you're not mindful of dealing with them at the moment. So much like you should have a pre-trade routine, you should also have a post-win protocol, knowing exactly what you should be doing based on your patterns of behavior, the ones that are being highlighted by your journal. Again, if you're someone that's constantly making mistakes because you realize that that is a pattern of behavior after you win, you are responsible for doing something about that. You need that post-win protocol to allow you to reset and get back to a state of equilibrium, as I like to call it. Okay. A couple of things that I think can also be quite beneficial in terms of a framework and a process is, I think for every single one of us, it makes sense to focus on the process behind what we do, right? Have process-based goals and process-based thinking as to how we approach the markets. And process-based focus points all come from the understanding that there are really only 4 things that we can control as part of what we do in the markets. There are really only 4 areas: entry, trade management, exit, and that's for profit or for loss, and how you manage risk throughout that entire process, right? That's it. That's all you've really got control over, because the moment you hit buy or sell, you have no more control. You have zero control. If World War III breaks out, if terrorism happens, if a nuclear, disaster happens, if a natural disaster occurs somewhere, we have no control over that. I promise you, the greatest of setups and every fundamental factor aligning in your favor will completely change the moment events like this really occur. So I think consistency is really found when you start tracking process, the things that you can control rather than the things that you can't. If your metric of success is relying on the idea that I need to make money today, tomorrow, this week, or this month, you're giving success to something that you can't control or influence. And again, that's going to be something that always works against you. So that's going to be something that you need to be mindful of and you need to fix from before you even get into the markets. Focus in on process-based thoughts and goals. That's where you're going to find consistency, because you can always control them. You can always do something about it. The last thing that I think makes sense to add into your plan, it's a proven method used by many high-performance athletes, and it's tying in a little bit of visualization to your trading practice, right? Mentally rehearsing and learning to stay calm during drawdowns and wins, right? It can all be done in your mind. You have to think of visualization as like a mental blueprint for success. I follow a philosophy that you can't be what you can't see. If you can't create a winning scenario in your mind, if you've already lost the game in your mind and you don't believe that what you're aspiring to is actually possible, then what you're going to find is you've already lost the game. You've already lost, right? It doesn't matter what happens. Your mind is going to find a way to create the reality that it is envisioning. So for me, creating that mental blueprint that sees you sustaining the success that you know you're capable of, it builds confidence in your execution over time. And that's something that can be really, really beneficial to everything that you do. Okay. Now, in terms of sustaining this long term, right? Everything that we've talked about here so far in terms of overcoming some of these psychological hurdles, they all rely on the idea of process orientated fixes that you can implement as part of your approach to the market, right? This is the pre-trade routine. This is the process for your emotional regulation. These are your post-win protocols. These are ensuring that your focus is on the process and ensuring that you're visualizing all the right things. I believe you instill a long-term success framework by focusing on a few broader things over the grand scheme of things, right? We've talked about a few things that you can do in each and every day. I think a long-term success comes from how you think about trading and investing in the grand scheme of how you approach the markets, right? There are certain things that you have to be able to take seriously. There are certain things that you have to be able to focus your mind on thinking of if you want to create that sustained success in the long run. The first one that I always encourage, and it's one that I think too many people often underestimate, is the importance of keeping a good journal, right? It's impossible to have the level of awareness that you need to succeed if you don't have a good journal. And I always say this because our memory and our mind is flawed at what we actually remember and how we recall memories over time. If I asked you what you had for lunch yesterday, you'd probably be able to tell me. But if I asked you what you had for lunch last week or last month or 6 months ago to the date, could you tell me? Chances are probably not. And if you can't even do it with something as important as food, as it is for us in terms of sustenance on a day-to-day basis, how do you think you're going to do it in terms of the markets? If I asked you the rationale behind taking a certain trade that you took 3 months ago, you're going to be able to tell me? My opinion, not without a good journal. Your journal allows you to connect the dots and track the emotions and patterns between your mindset and your behavior. And if that's not something that you have been documenting and collecting data on over time, it's really going to hold you back in the grand scheme of things, right? I always think, as well as a journal, you need to have a plan for governing your risk management, right? We've touched on this at certain points of today. We've talked about the idea that your success in the markets in the long run is really dependent on your ability to have an edge, to understand your mindset, and then to have a risk management framework that really brings it all together. You have to understand that everything that we do in this game, it's not about prediction. It is about becoming a good risk manager over time. I promise you, there is always a day where the markets will humble you. There is always a day where you're not really going to set yourself up to do all of the right things. You're going to make mistakes. Life's going to get in the way. You're not going to be a perfect individual all the time, and that's part of being human. Your risk management is there to protect you. Your risk management is there to ensure that you are doing things in the right way where your edge can actually thrive in the long run. If that's not something that you're focused on, if you're trying to find success in the next handful of trades, you're setting yourself up to fail. And so you need a risk management protocol that works for you. And that protocol is not just how much you risk per trade, but it's the underlying belief that you understand your entire job. The only way that you're going to succeed in this game is completely reliant on the idea that you have to believe your job is about managing risk. It's not about prediction. It's not about being right or wrong. It's not about how much money you make. It's about ensuring that your winners are kept as large as possible and your losers are kept as small as possible, all in alignment with your edge. The moment you prioritize the idea that you are a risk manager, it becomes easy to accept the highs and the lows. Because during the highs, your job is to understand, I need to not get carried away during this point in time. I need to ensure that I can do all of the right things to continue to succeed in the long run. And during the lows, you need to understand that my time is just to manage risk. If I've taken a loss today and it's been a small controlled loss, that was a successful day for me. And again, not enough people are thinking and focusing on that thing in the long run. Okay. Couple other points that I think make for really important things to think about to set you up for long-term success. I think every single trader needs to have a performance review that they sit down and they do with themselves. Now, weekly, I would argue that that should be more from an emotional perspective and an execution perspective to ensure that you've stuck with your trade plan over time, to ensure that your emotions haven't gotten in the way. That's what ensures the consistency that you need in the short term to create those long-term results that you're really looking for. But then I would argue over a larger sample size of time. Maybe this is something that you're going to do quarterly. Maybe you're going to do it every 6 months. Maybe you're going to do it every 12 months. But to actually look at how your system is performing. Was there something else that you could have done as part of your system that would have improved your results over a larger sample size? The reason I mentioned doing this over a large sample size and not a small one is because so many people get confused with trying to optimize and improve their approach based on randomness and not real anything of substance, not real probability in the long run, right? You have to remember that there is nothing to learn from your last winning or losing trade. Your last 100 winning or losing trades may have a lesson for you. And so this is why in the short term, on a weekly basis, I would say focus on execution and emotional awareness. But in the long term, focus on that system refinement, not emotional reactions, not getting caught up in randomness, but actually focusing on the things that can help you to find greater probability over time. Okay. And the last thing that I would couple onto this, and I speak this from a place of experience, is you want to be surrounding yourself with the right people, right? That might be surrounding yourself with the right level of traders, the ones that are actually treating this like professionals. And that's the exact mentality we are trying to create here at Darwinex. It's people that are not prioritizing the short term, people that are not trying to pass an account, blow it, reset, and then start all over again. We're looking for traders that are in this for the long run, that are trying to create long-term consistent profitability. Okay. And that starts with keeping the right energy around you, having the right people around you, being part of the Darwinex community, surrounded by people that are all focused on the right things. These can be really, really beneficial for you in the grand scheme of things. Maybe you want to take this one step further. Maybe you want to seek an accountability partner. Maybe it's someone that you found inside the Darwinex community that you can really resonate with what they're saying. Maybe you want to go ahead and find yourself a coach or a mentor, someone that you're going to be able to check in with on a daily, a weekly, a monthly, a quarterly basis to actually sit down and review your performance to determine how you've actually done over time. You need it to be someone that's going to be real, someone that's going to be raw, someone that's going to be able to call you out when you need it. Because the honest truth is, and the reason that I encourage a lot of this, is we are most blind to our own mistakes. We suffer from these cognitive biases, these traps. We can make excuses and justify as to why we've done certain things. I have also taken this step recently, right? A few weeks ago, I reached out to a friend and a client of mine to become my one-to-one accountability partner to ensure that I'm focused on doing the right things and that I have somebody that can call me out when I need it, when I'm not doing the right things, whether it's in trading and in life. I understand as a coach the importance that accountability has on a lot of people, and it's something that a lot of people tend to underestimate in this game. Okay? So I want you guys to really understand the main messages that I want you guys to take away from today is I want you to understand that really winning is not the end goal, right? It's staying worthy of that winning, which is what's important. That means you have to have the right mentality. You have to have the right habits. If you don't have all of those things, you're not going to be able to maintain that consistency over time. I have always found, and a thing that we have hammered on today about, is this idea that success reveals more about your psychology and more about your strategy than sometimes losing periods will. That's the true test. It's the thing that everyone is striving for, but most people are unprepared for. And the only way you succeed and stay consistent during these periods is you have to have structure. Don't rely on emotions. Don't rely on thoughts. Don't rely on hoping and just praying you're going to do the right thing when that winning streak happens and comes for you. When all those milestones start getting hit, you need to have the structure in place, right? Winning exposes those mindset gaps. Your job is to protect them, and you have to find the right systems and processes in order to put in place, right? I would almost argue that depending on the person, there are going to be some people that struggle with the losses way more. There are going to be some people that struggle with the wins. You have to ask yourself, which one do I struggle with most? And that's where you get clarity on, this is what I need to work really hard on. It's not just the generic, I need to spend more time on my strategy, or I need to refine my entry, anything like that. This is about better understanding yourself as a person, as a person, right? One final reflection prompt for you before we start to wind down today's session. I'll open things up for a little bit of Q&A. If there are those of you on today's call that would actually have a question you want to throw my way, whether it's linked to performance or psychology in any way, shape, or form. One final reflection prompt from you. Based on everything that we have discussed today, what habit, what routine, what process are you going to look to put in place that's going to help to protect you from yourself after your next win, right? What one habit, one process, one tweak are you going to make to your approach to the markets that's going to help to protect you from yourself from your next win in the markets? Okay, let that be your takeaway from today's session. And I'm hoping this has been an insightful one. I'm hoping it's the main objective of everything that we're doing here is to provoke thoughts, to get you to focus on maximizing your performance in the long run. Okay, so if you come away thinking about at least one area of your trading a little bit differently, a little bit deeper, with a little bit more awareness, that is the purpose of what we're doing here on today's session. Okay, thank you guys so much for your energy and your attention today. I will hang on the line for 10, 20, 30 seconds or so. If you do have a question that you would like to throw my way, feel free to throw them inside the chat. I will be keeping an eye on it for the next 20, 30 seconds or so. I always like to close these with a little bit of Q&A. If there was anything that was unclear from today, if you're struggling, if you're going through some highs, some lows, some setbacks, and you would like my input, my advice from a performance and a psychology standpoint, I'm more than happy to do so. One other alternative, which I would recommend, if there are some of you that are watching this back on a recording, and there are things that you would like to ask or you would like to have them answered as part of these sessions, I am also part of the Darwinex Discord community. If you want to post a question for me in there, or if you want to shoot me a DM off the back of that, please feel free to do so. I will either respond inside of Discord, or the more helpful thing I think would actually be to bring some of those questions to these sessions and actually answer them live on the air, because the chances are if you have it, somebody else is probably thinking the same thing as well. Okay, we're going to wrap up for today. Thank you guys so much for your time and energy. I hope you guys have taken away something valuable from today, thought about your process in a completely different way, and it's going to hopefully improve your performance going into tomorrow. Shout out to the team at Darwinex for allowing me to host for today. Always a pleasure, and I look forward to speaking to you guys again in a couple of weeks. Thank you guys so much. Take care, my friends.